Hello friends, welcome back for Bitcoin Technical Analysis. I'm your pal Outcrop, and I've got a bit of a stupid smile on my face because I've been trying to start this video for the last 5 minutes and I keep messing it up. Let's try and make a resolution, right? This will be the version that I use almost no matter how bad it gets, right? I've got my diluting juice here. You might call it squash or something else. In Scotland we call it diluting juice. And that's hopefully going to stop me from getting too dry mouth here. And I guess part of the reason why I'm getting dry mouth is because I'm such a big idiot. Now, we're going to be talking about the Bitcoin technical analysis in this video. I'm your pal Rocky Outcrop, by the way. You're all Rocky Outcropticians, and so am I. We're all Rocky Outcropticians together as part of this big family. And thank you so much for joining me on this journey. And we're going to take a look at the Bitcoin prices and how they've been operating, all that jazz. The current price at the minute is 6,884, as you can see above my head. And we'll be talking about how we've come in here at this 21 EMA. We've got this price target in around where we are currently at 6,850, and we've also had this horizontal line on the charts. We've got various positions of the moving averages to take a look at, and we've also got these Fibonacci's to take a look at, and we've also got these oscillators to take a look at, and we'll be doing all of that on the 24-hour and probably the 4-hour time frame in just a moment or two. Right now, if you want to, feel free to skip ahead. I don't know how long this little section will take me, maybe a minute and a half, as I wanted to say thank you to everybody who has already subscribed. Now we're coming up to 400 subscribers, 400 Rocky Outcropticians in the world. I personally can't believe it. I think it's absolutely amazing, fantastic. I'm so grateful to every single last one of you. And I just wanted to sort of point out then how I'll be going forward and keeping this sort of keeping it real ethos in mind as we look to the future. Whenever you know like 10 trillion subscribers on there, how's old Rocky going to keep it real? Well, this is insider info. I have this song going on in my head. Have had for the last wee while, and it's so I suppose the only way to sort of move past that is to share it with you, no matter how embarrassing it gets for me. So if you're a fan of Jurassic 5, then you'll know this one. If you're not, then Jurassic 5 are a classic hip-hop group, and I really liked them back about 15-20 years ago now. I don't know. So yeah, and they've got this song which is all about sort of keeping it real when other MCs out there don't know the deal. And it's called Concrete Schoolyard. So I just thought I'd run through the first couple of verses with this. Now, I know this is embarrassing and stupid for me, but we're going to do it anyway, so I can get it out of my head, and then just know that like this is what I'm thinking, and this is how I want the ethos of the channel to be, and I'll always stick with it. Okay, so here we go. I'm going to read them. Now, don't file any copyright jazz against me. That would be cheeky of you. And I'm not going to put the actual song on, but feel free to Google it, or not Google it, YouTube it after this video. Maybe I could link to it at the end. I don't know. Anyway, here we go. Now I'm going to say this one time, boy, and that's my word. We're rocking shots and not fire through the Hindenburg. The contribution is clear. You add water to bone, you get Jurassic 5 on the microphone. In this case, it's Rocky Outcrop. Now, if you like the tone and how the harmony's done, and the sucker MCs die before they've begun, well, I'd like to know if you've got the notion, because we're number one. Well, we're not number one, right? But even if we do become number one, then we'll always try and keep it real. I'm not saying my style is better than yours, and I'm definitely not. There's plenty of really fantastic technical analysis and all sorts of creators out there on the YouTubes. I'm not trying to say my style is better than yours. I'm just on some other shit. I'm all about the beats and the lyrics, so when you hear it, you can feel it. The vibe is energized by the presence of my spirit. No interference, we preserve, persevere. God, got that one wrong. The purpose is clear. We're here to leave your ear hurt and severe. You're looking in fear because we take it back like Robin Loxley, rocking from countrysides to spots where hard rocks be. I often wonder where these MCs even, if these MCs even know how it feels to dedicate their whole life to the mic of steel. This TA of steel, I suppose. It's not about the bills. That's not keeping it real. A lot of tight rappers out here ain't got no deals, and I feel like that's maybe slightly the case with a lot of the superficial YouTube TA that you get out there. We appeal to the brothers with flow finesse because it's the 100-watt bloodshot game of death, because we're protected by the covenant of words and beats. Rewind and feel the heat, recline and take a seat. So and I feel like that's really what we've got here on the go. Thank you so much for joining me every day with this technical analysis. analysis, like, subscribe, all that jazz. And let me take you back to the concrete streets, original beats with real live MCs, playground tactics, no rabbit and hat tricks, just that classic rap shit from Jurassic, and in this case, Rocky Outcrop. I walk from Tanzania, earthquake Transylvania, on my way to kick a hole through the wall of China just to get the right blend, cause it's schizophrenic of the pathway to living. I fell into the deep end. You shouldn't have told me the pyramids can hold me. Now a contest is what you owe me. And maybe that's quite a lot of people out there feel like is that line. You know, it's like when you see the prices going up past 7,200 up to 7,400, and you've got people promising you 8,000, and it's all sort of FOMO and fear and greed technical analysis, instead of sort of being real, keeping it real, like this concrete schoolyard we have here on the channel. So pull out your beats, pull out your cuts, give us a meg what up, we're going to tear shit up. I'm on some old forgotten sun up to sundown like picking cotton. The nutty Professor Science dropping rockin' Robin Hood from New York to Compton, me and my three sons, Jabari, Shakir and Kashim. Well, I actually don't have three sons, but you know, Akil there, who is the person who sang that part of the tune, then he does. And well, let's keep it real for everybody. Let's keep it real for everybody, not just that guy's three sons. I'll not do the rest of the tune. Thank you so much for sticking through it, and welcome back here. If you decided to skip past that section, you probably did yourself a favour. Okay, we can look it up and put a timestamp in down below or something to save the embarrassment. Thank you so much for joining me. Like, subscribe, comment, all that jazz. Let me know if you like Jurassic 5. They're certainly one of my favourites. Okay, so where are we? Where's the price come? First off, I suppose, let's do a little check on the volume. It continues to diminish. So far, today's volume has been rather pathetic. Nothing is going on so far. Well, let's just see how things pan out over this weekend. In fact, we're already in the long weekend with Good Friday having passed yesterday. We've got Easter Sunday tomorrow, and are things going to be a little bit? Can we expect a little bit less volume overall? Yes, we can. What often comes hand in hand with that is, of course, volatility. Should a lot of the order book get sort of dried up before anybody comes back on and adds it back in, you can get a bit of volatility as a touch of the lack of volume, but also sometimes you can just get sort of plain old sideways for a wee while. So we'll have to see how things go along the way. We've been looking at this 6,850 line as being a sort of pivot point in the market for quite a while. Pardon me. I'm so sorry, pardon me, but like we said at the start, I promise I have to make this video, no matter how bad it is, and not mess it up at this time. So here we are, and yeah, pardon me, and we're just at this 21 EMA here at the 6,850 level, and we talked about that being a crucial level for quite a while, and we're back down at it again, and we want to see that hold, obviously, for the sort of the upward trend to continue. But there's a lot of weakness in the world and the economy. We know that the jobless figures in America are huge, and of course that's just, you know, the tip of the iceberg. The same things happening all around the world, of course. It's not just America, and there's a global sort of crisis on the go with this pandemic. So, you know, just purely relying on the technicals alone here could always leave you in a bit of a lurch. So I'm not a financial advisor, none of this is financial advice, but I would say to people, you know, to operate fairly cautiously and don't get too carried away with anything. For instance, if you read somebody on Twitter saying that they've been talking about, say, this bar reversal pattern for the last 4 or 5 weeks, and I think so looking really bullish and all the rest of it, take it with a slight grain of salt, of course. So we're in here, and the upside targets remain as they were really before we went up here the first time around. You know, when we're talking about this 6,850 level, and you're looking at 7,200 and 7,400 areas as being sort of your two question mark areas on the way up. Of course, right in the middle there, you find right now the two moving averages. This red dotted line is the 50 simple, and this green smooth line is the 55 exponential. So you find both of those operating in there, that sort of 7,300 area. I imagine they'll be down here right on this 50% level, you know, tomorrow or whatever. And you know, we could be looking at whether or not, as a part of a test up to here, whether or not we're kind of going up above these averages over here. And of course, this is a big question for us when we're looking at the technical analysis of this thing, not just at the FOMO and the fear and the greed of it, but when we're looking at this and we're saying, hey, look, you know, there is actually this death cross on the go. How are the prices going to shape up on the longer term, and versus the sort of the average of where we've been over the last 50 days and 200 days, with the white dotted line there being the 200, and you know, so we will have to keep our eye out for this in the near future and see how we operate within it. in terms of if we're able to go back above the 50, and then so we'd have the 200 up above us as another sort of ceiling to be looking at as we operate in there, and people kind of look towards the broader term. More patient people perhaps than yourself, maybe people with a slightly longer outlook than yourself perhaps, maybe, or maybe people who are more used to sort of avoiding any FOMO or whatever, will be looking to see how this kind of operates over the longer term. And in and one of those aspects of that, of course, is that we have this potential for a gap in here on the CME chart. So the prices actually being where they are right now means that there would be a tiny little gap potentially on here which could get filled very easily, but that's what would happen. If the prices go up to sort of 6,950, then you'd probably be looking at no gap at all here on this side. Prices go right up and beyond there at 7,400, then you'd be looking at a gap towards the downside. And there's this other sort of area that people have been, I always forget where the box is. Let me waste 20 minutes of video time as I look for box. I might just give up on this because I find it so hard to find the bloody box. Is it behind the drawing thing? Ah, yeah. So then your next area would be, in terms of gap, would be where this box is here. So you've got a gap operating on the CME charts up towards 9,000 here. In fact, no, it's higher than I drew it in there. The gap actually goes all the way up here to the next Fibonacci level, which is the 382 on this retracement here that we have drawn in. So anyway, we talked about, I explain them in every video, it's tiring. So anyway, you'd have a gap towards the upside here. It's sort of 8,250 up all the way up to 9,000 there on the upside, and people were talking about that with recently. And of course, if we did get up towards here, then there's no guarantees that you'd actually fill it. It tells a little bit how the dynamic of how the prices work when you're approaching it. And when could that be? Well, that could be any time in the, it could be any time. So we'll re-question. That's why I hadn't bothered drawing it on before. If we ever do get up above all this area, and we'll keep an eye out for the meantime about whether or not we get a gap here on this one just at the minute, and how things could operate. What we're looking at in the small time frames really is how the 6,950 level will work. That's the first port of call, of course, is to break this 382 here and actually have it operate as support and move towards the upside, and then kind of consider this to be our higher low compared to over here. Should we actually see the prices go below the 21 EMA here, then we'd be looking at coming in and setting in and actually looking to maybe not setting a higher low compared to this here area, but a higher low compared to this here area, which is down in below 6,000. Alrighty, so that's us asking the question essentially. Another way of phrasing that is, was this a local high here? Or is this the local high, with this just being on the way up to it, and then is there a higher low and potential anywhere down here for people to kind of overall remain bullish in terms of this overall upward move? And the answer is, this isn't really a local high here at all that we had. And of course we did during that period of time have volatility, seeing the prices move like a solid 10%, and you would expect to have a higher low in there at 10%, but that's just the way things have been, and we've been talking about this over the course as well, for quite a wee while. For the course, that's just a phrase we use in Scotland to say over the piece, or over the duration. The last anyway, we've been talking about this for throughout this period here of this upward movement. How there's been this volatility, which kind of almost can be described as also being like a lack of conviction. And should the prices come on down below here then and down towards these other areas, 6,400, that's a key area for us, because as well that's yet another 382 Fibonacci retracement. You'd hope to see it survive above there. Now, what were we talking about in terms of before a few days ago? And I'll just reiterate this last time on 21st. We're looking at the oscillators, looking at the 4 hours and wrapping up. Thank you so much for sticking with me. Like, subscribe, all that jazz. What we're looking at before is just kind of pointing out this sort of little dynamic in terms of the maths and everything else of how the Fibonacci retracements work. Now, the distance between a 50% retracement and a 382% retracement is the same difference as between over here at between down here, for instance, sorry, just looking at the wrong end of the thing, between down here at 0 and 236. Okay, so the difference in that gap there in terms of percentages is the same as the gap between 50 and 382 essentially, and you can see that with the Fibonacci thing drawn on. So if I were to draw this up to the 50% here, you can see the 382, the 50% here, you can see that the 236 comes in at the same price as the 382, just here, right? So now you've got that in mind. If we see that since we're below this 382 over here, we didn't actually reach the 50% mark there, so we've not come back as far as having had a 236 retracement there. But should we go down as far as this, then you'd be very much worried about that. Having already gone above here, you'd know that you're past the 236 at that point in terms of one drawn in. And for the curious, I suppose, amongst you, if we just do this sort of body to body real quick here to get an idea of where the 236 could be, then you're looking at 6,750, and I feel like 6,750 is what we kind of feel like is among all of us probably anyway, as having been an area where you'd be thinking, oh, have we broken that 6,850 area? But of course, we've come down here, wicked down here a couple of times, and that's not, that's not something just purely to be taking your trades off the back of. Not financial advisor, no, that's financial advice. Looking at this here in the daily time frame, we see that the negatives wrapped up above the positive. By the way, if you wonder why I look down that way, sometimes it's because that's where the camera used to be. I forget that you're sitting up there now, so whatever. We've got this bearish divergence on the MACD down below, but there's no bearish divergence on the RSI or the stochastics, so that's good to see. But this is kind of turned around. There was actually no bearish divergence really worth talking about as well on the DMI on the way up here, as it happens. Could we see these unwrap around again and go towards the upside? Yeah, sure you could, but could you see them stay as they are and develop towards the downside with the ADX coming up and putting in a trendward trend? Sure you could, yeah. Let's keep an eye out as well for things like heads and shoulders. Like, on the way up here, we were kind of doing that. We had a potential there for a shoulder. This could potentially have been a head. And we're thinking, if we got something coming up here where that was, or here where this was, and we made a big measure move off the back of it and all that jazz anyway. So you can do the same sort of concept here as we're looking in this chunk here as over here. And I'm not talking about fractals over here. All I'm talking about is just to bear in mind that as we come up here, make higher highs and higher lows, that's all great and that's all gravy. Let's just then, if we ever do make a higher low, which is like a little bit lower down than where we thought maybe it might be or whatever, then take a look at how things do on the way back up again thereafter, because obviously that kind of becomes more crucial to be able to maintain your shape and your sort of formation as opposed to suffering something like this in the longer run where you end up with a head and shoulders. Looking down the way then, having done the oscillators on that and on the 4-hour chart, bearing in mind as well in the 4-hour chart that this being a high, this being a high, this being a high, this being a higher low, this being a higher low, this being a higher low, and then over here, if this is the higher low here, sorry, this is again a sort of higher low. Of course, it is lower than this part, but this is the low just here at 4 a.m. on the 20th, rather than over here at 4 a.m. or at midnight on the 6th or whatever. And so over here on the 10th of April at midday, that would have been the low on this one. So let's look towards divergence and say in this chunk, go back the way, looking at this high, this high, this high, this high, this high, this high, that there wasn't any, but this high, and this high, there was some on this DMI over here, and then over here between this high and this high, then there was on the MACD. So there's a touch of divergence. Then how much would that play out as? And we've got a higher low so far. So the question then becomes, is this going to be the higher low that we're looking at, kind of what we're talking about on the 24-hour time frame, or will we go on down thereafter? And we're right at the neutral line here on the RSI. We're coming down here towards where you could, if you wanted to say that there's an overall upwards trend on this thing, you'd want it to turn around kind of today, so that you don't have an abhorrent tick there on that one, or to kind of just say this is maybe sort of thing that we're looking at, or whatever, and to keep that kind of flow going. We don't really want to see this coming down here. If it goes down into the oversold territory, then of course you'd probably be looking at having come in here, and you'd be looking for this other sort of 5,900 as your higher low area again. And just to say that the same in terms of the lower time frame, like the 4-hour, the 12-hour, or something like that, say to have the same sort of discussion as we had over here with regards to whether or not this is your low on the 24-hour time frame, because of course looking at that, then we are including it in the 4-hour chat. So yeah, so where does that leave us? Where does that leave us? Are we bullish or bearish? Do we do that much on this channel? We don't really do that much on this channel. We try and remain sort of neutral. Where does it leave us? Well, it leaves us knowing the areas to stay above 6,850. You've got the 144 moving average coming in here, there on the 4-hour chart. The 200 simple moving average on the 4-hour chart's down there at 6,450. We have these areas kind of screaming at us like these are areas of key note. So we can I think be responsible for our own trading, our own technical analysis, our own management, having watched this video here as we look forward. And I'm sure you'll look at other videos on YouTube and all that jazz and get more ideas, and that's good, great, good on you. The 21 is just crossed under the 233 and the 50 here. I don't want to see the prices continue in this area overall. The 21 would continue down here to this 55 and then cross below it as well, which would be another negative little influence on us as we're looking forward. The volume is continuing to diminish. Let's hope that if there's any sort of consolidation period, that it doesn't take more than a day or two to complete itself and then come back up here and start moving up towards the upper side. Otherwise, we'll not get a proper chance for these things to all splay out. And for this particular cross here, which is the golden cross, is not the golden cross, but it's a sort of golden cross family member on the 4 hour time frame, because of course that happens on the daily time frame, officially is here. So yeah, you know, when and I suppose you can remember I was saying before at the start, kind of living between these averages. That's what we're doing currently. That's what was happened here. If you remember me saying at the 24-hour chart, looking, saying, you know, can we go between these and look towards the next area as being a target? You can see that way more clearly over here on the 12 and 24. In terms of the 12 here, where this is a death cross that's happened, and we're looking at a kind of really strong, nice upward slope here on the 50 as we're between these averages. On the 4 hour time frame, you know, it's flattened right off the 50. Meanwhile, though, as we're going down, you can see the dynamic at play, right? So those are your two sort of different cases, and yeah, and of course the crucial line currently remains as well as sort of 6,850. You know, 8,000, 6,000. Did I say 8,000 there? 6,850, 6,750. Should we break that on a bigger time frame? Looking down the way, 6,450. Looking up the way, 7,200, 7,400. Looking beyond even where that was, and you've got the sort of 6,200 area as well. Let's see how things all pan out. We're still consolidating overall. We've got a trend, which is an upward trend, but it's just really not acting like an upward trend overall. And we have a period of a channel operating here, which is never yet fully declared whether or not it wants to be a bear flag, which it could be, or in fact a trend towards the upside. And looking at the daily time frame, it's not like we have things saying to us that we have a trend for sure. So stay vigilant. We're at the bottom of this channel just now. Breaking out of it could be fairly negative. Okay, right. Other than that, though, FOMO right up. Let's get our spacesuits out, take massive longs off the 21 here, and then ride it all the way up to 7,600. Why not? Let's not even bother using any stops. I'll catch you in the next episode. Thanks very much for tuning in.